Good afternoon, traders and investors. I hope everybody is good. I hope you guys had a great long weekend. Markets were closed on Friday. Maybe you took some of the plays that we were talking about last week. They all did very, very well. They are mostly worthless come today. So we got some good 75 to 80% profit on all those plays, just holding them over the weekend, having wrote them last Thursday. And let's take a look at the markets. By the way, those plays were ON Semiconductors, IWM, Russell Index, and Tesla. So let's go over the SPY for today. So guys, as you can see, today we kind of pushed down real hard this morning. I assume, because there was no negative actual headlines today, I assume this was a delayed reaction from last week's non-farm payrolls, which was actually a pretty good release, to be honest with you. The Fed is now in a position where should they have to pause rate increases or start decreasing the interest rate in the nearby future, they can now use the slowing jobs market as a justification for that. So playing exactly into Jerome Powell's plan. I'd been theorizing for a while now that Jerome Powell has to maintain a very harsh language to prevent people from going outside and spending all of their disposable income, which would in turn increase inflation back up. So every time he takes the stand, he does have to give some pretty aggressive language to the effect that the Fed's not done yet. There's more work to do. Yes, we're pleased with the work that's been done, but we still have more to do because, guys, the job market was still relatively hot. And the last thing that he wants, while the media is building the recession narrative, the last thing that Jerome wants is for him to say, everything's fine, everything's under control. We're actually thinking about reducing interest rates now, and we're going to increase the pace of reductions potentially this year. And then everybody just goes outside and spends all the remaining savings and disposable income, which would uptick inflation. So he doesn't want that. He has to maintain the harsh language. And now we're kind of seeing the great benefits of this, right? So the markets are kind of calling his bluff at this point, and that's exactly what we want to see. You could see it in the bond markets. If we take a look at TLT before we get into SPY here. So TLT now, 20-year treasuries, considerably off their lows. And if we look at the yields, right, the yields considerably off their highs, especially the 2-year and the 1-year, right? So we're making some good progress. The markets are kind of calling out the top here. And should everything maintain, we should be good for some bullish continuation. Now, this year won't be an excessively crazy recovery year like 2020 was after COVID, but I personally expect for just a normal, slow-paced recovery as you were seeing after, 2008, right? So slow-paced recovery, but still decent recovery to the upside. So that's what we're kind of building into now. Looking in for the moves of today, though, as we can see here, SPY pushed down initially this morning, touched our 12 EMA finally, which is what we were talking about last week. So it does not want to, apparently, doesn't want to lose any more than that. And as we said, this is really, really good. When we take a look at the daily higher low from here, as you can see, guys, we barely gave back 40% of this entire upswing, which lets us know that bulls don't want to give back too much. They want to be close to this resistance area because the closer they can maintain to this resistance area while building accumulation, the easier it is for them to break it. And you can see that on the weekly time frame, right? Weekly time frame, we're kind of making this nice little bull flag up here. Now 2 weeks in a row. Seasonality, April is a relatively bullish month. So considering last month's very, very bullish close on the doji candle closing at the high, we could expect some form of continuation into April. And then as everybody sells, sell in May, go away. That's when we may, if we push up something like this throughout the month of April, we may get some retracement into May, which would be perfectly normal. That would then consolidate back on the support before potentially resuming the continuation of the uptrend. So that's just how I'm kind of previewing the markets, guys. But as of now, as you can see, 4-hour completely engulfing this morning's move. Very, very, very bullish reversal here on the day. And this was kind of fueled by a comeback in tech. And this morning, most of the major indexes were hitting the lows. So we had healthcare on the lows. If I show you guys real quick, we had healthcare on the lows today, early in the morning, right? Early in the morning, healthcare on the lows. Financials also early in the morning, right on the lows here, but recovered almost immediately. And tech was kind of the one that aggravated the move to the downside. And as you can see, that really, really big recovery allowed us to close now in the after hours virtually flat from Friday. Well, Friday in the futures, Friday wasn't open, but that would put us slightly above actual Thursday. If we look on the SPX, we should be technically green today. Yep, up 0.22% because this doesn't consider Friday because it was closed. If we take a look at the NASDAQ, same pattern, bullish engulfing, meaning we engulfed all of the move down. That is now the second time that we've done that in the last week. Well, weekly time frame, that is, in the span of the last 7 days. And that just shows to me, once again, guys, that the bulls, we're kind of trailing. SPY hasn't broken this range, but the NASDAQ has, right? So the NASDAQ is now, it's kind of doing a Bitcoin Ethereum. We're going to see those later. But if you guys want to see this, right? SPY was struggling with relative resistance, and the NASDAQ was pulling ahead. So you could say that SPY was kind of lagging behind. Now we have the NASDAQ sitting on top of this beautiful support level here, right? So we have now touched it. It's a local area, right? It's a channel. You shouldn't be an exact science. So this little range here is what we've been kind of bouncing off of. That's really, really good. You want to see bulls hold the 12 EMA right here, as they've been doing. On the weekly, simple little weekly bull flag. Can we call it weekly consolidation? Yeah, I mean, it's now been 2 weeks where we've kind of slightly pulled back off of our highs. So now we're going to be looking for our daily continuation into potential higher levels here. At least that's what I'm going to be looking for. Bulls at this point in time still in control. And that's what we want to see, guys. We really want to see the bulls maintain their full control here over these time frames. And if they continue to do this, we may be in for we may be in for a treat here. I don't want to jump the gun too much, but the continuation could be good, suffice it to say. So let's look at the Dow Jones. Dow Jones, same thing, right? Coming back here. This is kind of a slight cup and handle here. If you would put it on the weekly time frame, you might lose it. You might see it more on the 2-day time frame, something like that. So we're really coming back off this move here. This was the banking crisis move, right? So you had a lot of financials kind of trapped because the Dow is somewhat financial heavy, a lot of big names in there. So now, as you can see, we're kind of regained that entire move, sitting on the top here, and now it looks like it wants to push higher. So until the bears show us something, guys, I'm not gonna say that the bears are in control here. I mean, the bulls have full control of most of the time frames here. They've got good momentum on the weekly, good momentum on the daily, good momentum on the shorter time frames, and most importantly, these shorter time frames are not overbought, right? So that's something very important that we want to see here, guys. The fact that the lower time frames are not yet overbought at all, and that just goes to show that they've been doing a really good job of having a balance here. They've been really balancing, the factor that the lower time frames 2 weeks ago were overbought. They cooled them off. Now we're ready to continue the move to the upside. Looking at our Russell, the Russell was one of our trades. Russell pushing really, really good today, guys. Really, really good. As you can see, it did not even really, it opened lower with the futures market, but as soon as it opened, just pushed to the upside. Look at this beautiful move. That's almost 2%, from low to high from the after hours, or pre-market hours rather. And as you can see, it's doing exactly what we wanted it to do. It reversed the daily downtrend, right? Now it's set the higher high compared to this guy here, set the higher low. And now what we want to see is follow through. Can the bulls break this pattern? Can the bulls create a new daily uptrend, which would give us some momentum on the weekly? Getting to, what we want to see is we really want to get to the top end of this range. The closer we can get to the top end of this range and consolidate there, the better chance we're going to have at breaking through it in the future, guys. So that being said, let's take a look at the cryptos here, because we had some good movement, good follow through. We've been looking at this now for 2 weeks. I've personally been looking at this, as a matter of fact. So take a look at this, guys. Bitcoin finally breaking the top end of our range. You could say we didn't break it by much, fine. But compared to this candle, the last candle that had an attempt at these levels up here, as you can see, it went up here and then gave it all back on the day. We got about 3 hours left on the daily close. MACD pointing to the upside. RSI still not overbought on the daily. 4 hour, could maybe use some slight bull flag action here to kind of cool off the lower time frames here a bit. The 1 hour as well could even, if it just moves around here like this, guys, this RSI is just going to come straight down to here, right? You don't really need to see a massive crash to bring that RSI down at all. So I'm going to be looking for further upside on Bitcoin. As we've been saying, guys, nothing new here. We really want to target this area here, the 31.5 to 32.5 range. That's the next area of resistance. And beyond that, there's really not much, guys. There's really not much. You got to look up to about 39, 38, 39. But one thing at a time. Don't get ahead of yourself. This is our target. Any short-term trades should be a target right here. And if it does hit that target, 31 would put us, 32 would put us right up here, right? If we would do something like this, that would kind of look similar to this move up here, right? Nice little second leg up. Then we can potentially use some consolidation. The daily time frame at that point might be overbought, and then we'll reevaluate. But for now, Bitcoin looking very healthy, very, very, very healthy on most time frames now. If we can just close the 4 hour like this. So if we could close the day near the tops of the day, be looking very, very juicy. Ethereum was the first one to break that range, right? So we were talking about it last week. That's the reason that we wanted Bitcoin to follow through, is because Ethereum actually took the lead and did it first. So now Ethereum is kind of lagging. It's not really lagging behind, but it's kind of ahead, right? So it had time to break out, pull back on top of support, and now it wants to go for number 2. If Bitcoin keeps pushing through, it should carry Ethereum as well. So I'm looking out for Bitcoin personally. At this point, I really want to see how Bitcoin does it, because now, if we look at ETH BTC, you see Bitcoin is kind of now leading, right? So Ethereum took the lead for a while, and now it's kind of, it's kind of sitting back and it's letting Bitcoin do its thing. So we're going to be very, very keen on seeing what happens with the Bitcoin follow through. And that should play out to a lot of altcoins individually as well. So let's take a look at some of the big names in the sector here today. Apple had some bad news today. Their PC sales were down about 40%. And as you can see, the bears kind of jumped on the news first thing in the morning. And it didn't even last for an hour before the bulls were like, yep, let me buy this dip right off the 200-hour moving average, right? So goes to reinforce kind of what I've been saying, even before I started making videos. I've been of the theory that, since virtually the turn of the year, right, and the indirect Fed pivot, which happened to the effect that we know that inflation's coming down. However, Jerome Powell needs to keep a firm stance so people don't go out and spend their money. Wall Street has called this bluff, and that's why markets have been moving higher. They know that the recession's coming, but markets usually always lead the economy by about 6 to 9 months. You will usually find, if you go back in history, the markets will bottom 6 to 9 months before the actual economy bottoms, and where you get peak macro fear. That's just because markets are forward looking. So Wall Street has been calling that bluff. You've seen it in the large cap stocks. You've seen it in the indexes as well. And this was just another event to where Apple, as I was saying in my previous videos, right, we had a lot of space. This was our higher low. There's so much space, guys, after we hit this little top here, so much space to come down, set a higher low anywhere around here within our moving averages, and then potentially resume to the upside. That's kind of exactly what's looking like it's happening, right? Weekly time frame, we're now in a weekly uptrend. It's clear as day, right? Clear as day. Even if we consolidate here a little bit, and push up here, nothing wrong with that, guys. Nothing wrong with that at all. Clear, weekly at this point, weekly uptrend, daily uptrend. So if you're shorting, there's not much to be shorting off of, to be honest with you. If you're shorting, the only possible theory could be that you think that they're too high and you don't understand how markets can be ripping like this in the face of a recession. Well, rewind the video about a minute ago and go on Google and look at the history. Markets always usually bottom. If you just Google market cycle versus economic cycle, you'll see that markets bottom 6 to 9 months. Look, market cycle versus economic cycle, right? You will see that the market bottoms, right? That the market bottoms 6 to 9 months before you get your full recession bottom, right? All right, so If we're looking at, let's take a look at some other big tech names today because they're the ones that move the NASDAQ and the markets the most. They're the largest weights. Microsoft, same thing, just riding this 12 EMA. Gap down open today, right? Gap down open as most of the sector did, and then just close at the highs. So we're still riding that 12 EMA. We're still in a weekly uptrend, right? First weekly uptrend since we started dropping. This is our first confirmed weekly uptrend since the market started dropping in November of 2021, right? So, there might be a few opportunities. If you want to top tick the shorts off of these tiny resistances here, right? I mean, and try to take the weekly consolidation back to the 12 EMA, it's something to do. But at this point, guys, like you are fighting the trend. You're fighting the trend. So it would be a counter trend swing trade. And I've done those a few times. There's nothing wrong with that, guys. But just understand that if your stop loss keeps getting hit because we keep making higher highs and higher lows, just understand that you're counter trend trading if you're trying to go short the major names right now. All right. So Microsoft doing a very good job. Bull still in full control. Google, same concept, right? So Google at this point, we really haven't, you could say that this is a weekly uptrend, but it's kind of actually a range, right? We're kind of just ranging between this right here. It's not really clear for me, right? If we were to come down something like this to the EMAs and then break out, then I would call it a confirmed weekly uptrend. But for now, kind of stuck in a range, considering the fact that Apple and Microsoft are in weekly uptrends, you could argue that since this low is higher than this low, that Google is as well, but it's not as clean, right? Not as clean. However, above all moving averages for the most part, right? Above the 12, 26, and 200 week moving averages at this point. We're consolidating at the top end of this range here. We've now confirmed the daily uptrend, still pushing higher, right? On the daily, on the weekly RSI, nothing stands out to me to be overbought. So Google still very, very, very healthy. Very, very, very healthy chart. Running into some resistance here, right? Previous support is now current resistance. So kind of struggling with that there. Personally, for Google, Apple, and Microsoft, I'm waiting for a pullback to write some puts on them. Haven't wrote some puts on them since probably this area here. The last one I did was Google and Amazon. Haven't even been able to do Apple or Microsoft. They just haven't pulled back enough. Now, let's take a look at NVIDIA. NVIDIA, guys, I was warning last couple of videos about shorting this stock, right? For the same reason I just talked about Apple and Microsoft and Google, right? You can't short. I understand. This is why I have this level up here. I'll repeat it once again. You can, the only reason you'd be shorting up here is if you're trying to pick tops. But there is no confirmation signal for a short here, guys. There's no confirmation signal, right? If you look at the ETF, which is SMH, the semiconductors, right? Semiconductors ETF, we're still in a weekly uptrend. Daily uptrend. There can be intersector rotation. So let's say Nvidia just kind of like does this. Nvidia could just do this for 2 weeks if it wants to. And other names like ON, AMD, TSM, that their charts don't look like Nvidia's does. Like let me pull up Nvidia, right? Straight line up. So you have so much rotation. You could do MU, right? So you can have intrasector rotation to where NVIDIA kind of takes a break from being in the lead, but semiconductors as a whole still remain quite bullish. So that's the danger of shorting NVIDIA, is that this entire sector is in play. It's a sector that throughout a recession, they have been able to control costs. They're at scale. China has now reopened. And they have massive purchasing power. All of these companies, guys, most of all these companies run between 20 to 30% net margins, right? If we go through ON, that was NVIDIA, you saw the margins. If you go through ON, 20% net margins, right? We go through AMD, right? AMD kind of struggling, as of 2022, obviously, because 2022 was the bad year. But this is a sector when everything is doing fairly well, like it's starting to become pretty good again in 2023. You can see, guys, like they run very, very decent margins when things are going good, right? So it's, if you look at a company like TSM as well, right? Let's go through TSM. TSM, look at these margins, right? I mean, like when semiconductors start running and you get the China reopening trade, you got to pay attention. It's a tough trade to short. Very tough trade to short. This is kind of looking like the ugliest head and shoulders, you know. But TSM is one on my watch list. I think this is a very decent level. This chart looks kind of like ON without the downside, right? If you look at ON up here, if you go back, it's just been up, right? But we're in a range consolidating over previous support. TSM, we're in a range consolidating above previous support here and this here. However, it came down a lot, right? So if you want, the semiconductor that I've been recommending was ON to right. But TSM also, when it comes down to the lower end of this range, there's some very juicy opportunities to write some puts on it, because I wouldn't be mad being assigned TSM, especially when we're still, to the upside here. We still have a good, I don't know, something like, 50%, right? We're still down 38%, but if you get it from here, right, and crack it up here, obviously the percentages to the upside are greater. So 40%, 50% to the all-time high, right? Decent risk to reward, especially if you're only nervous about it coming back down here, right? It's about a 17% downside. Let's call it 20 for rough numbers. For how much upside, right? 51 if you want to ride it back to all-time highs, if you believe that this was truly the bottom area and that the recession is canceled. Fairly decent risk to reward. That's over 2 to 1, right? And if you're going with shares, I mean, what's the worst that can happen? It's not as if it's a 1 or 0 event, right? You just keep the shares. And this company just continues to deliver ridiculous margins and ridiculous revenue growth every year. Not for nothing that Warren Buffett bought it. Tesla, as I was saying, right? What were we looking for? The tightening range, right? It ventured down into it this morning, guys. Tesla was down 4%. And what happened? Same thing as on Thursday, engulfing. Today, engulfing. The dips are largely for buying. Apparently, from what I've been seeing in this market, the dips are now for buying, right? We went down from the dips are selling on a lot of names prior to December. And now most dips are being aggressively bought, guys. So the Tesla puts that we were looking for, once again, was below 170. We were eyeing the 167.5s, right? The lower end of this range, 167.5s. We got some really good ones. And, if you would have hit them today when it was 175, you probably could have gotten even lower than that. Probably could have gotten the one, if you didn't get them on Thursday with me, you could have probably got the 165s for the same amount of premium as I got my 167.5s. But I don't mind being assigned Tesla at the lower end of this range here. Still believe in the growth prospects of this company, right? They're doing about 37% growth. They're building a new battery factory in China now. That was the news today. Some more news today on Tesla was the fact that they were lowering price again, and there was some speculation that it was going to hurt margins. But even if they do lose a bit of margins, I mean, they're still 3 times above your next auto producer, right? So Tesla's margins, guys, I know I use TradingView, right? So net profit margins, these aren't correct. I mean, going into 2023, if you look at the quarterlies, right? So it should be around 21, 22%, if I'm not mistaken. Not too sure why their net here is a bit lower. But they're running gross, I think 28, 29, and net, I think they're about 21, 22. If you look at their competition, right? Ford, where are the profit margins? Right? GM, where are the profit margins? Right? I forget what's the Volkswagen. I don't think they have a ticker in the US here, but let's try to pick it up here on the. Let's see if it gives it to us on London. Yeah, Volkswagen Group, right? Where are the margins, guys? Come on, right? All about margins. We're not comparing car companies here. If you can see the companies that I choose, I only talk about margins. We're in an environment where if you don't have good margins, you may still get punished. Companies with high margins have the amount and high cash flow can weather storms. And that's the whole point. Now, all right, that's it for Tesla. Tesla, bulls. Now, I would say that this is still a healthy looking chart. Yes, our daily's below the moving averages here. But if you look at the, 4-hour MACD here, we're kind of pointing back to the upside. We're kind of still stuck in a range, guys. This is a very wide range, right? Tesla's a very volatile stock. It's known for it. You can argue here that we're now starting to really cut more deep into every selling move. The buyers are coming back strong. So now we've created a lot of space to where we can come back, set a higher low compared to this guy here, and reach up and reset the hourly uptrend. And that's step number one, guys. You want to see a reset of the hourly uptrend, and then you move up the time frame. Then we can recapture the 4-hour time frame, and eventually we'll be back in a daily uptrend, right? So one time frame at a time. For now, the bulls did a great job today in maintaining that hourly time frame. So let's look at our plays that I want to point out to you guys. So if you remember, we went over the plays last week. Was the Russell was the first one of them, right? We were eyeing the 168s to the 170s, right? If you remember our Russell, sorry, I'm going a bit fast here, guys. I don't want to make this video too long. We were down here, the two videos that I was making last week saying, guys, look out for this range here, the 170 to 168s. They were offering about 0.5%, 0.8%. If you look at them today, guys, if you would have taken those trades, 168s to 170s, they're now worthless. Almost straight worthless, right? So very, very good price moving on that. And wait, let me fix my camera here. All right, sorry about that, guys. Had to fix the white balance, kind of went off on my camera. Sorry about that. Now, what we want to see here is the Russell, the puts that I was recommending, right? The 168s to the 170s. They were paying about 0.5%, 0.8% almost. As you can see now, guys, almost worthless. With the theta decay tomorrow, if we have a flat, a neutral, or a slightly up day, I mean, these will be totally worthless for this Friday. Feel free to take profits anytime you like. ON Semiconductors, same concept, right? The 70s to 72s, they were paying about 0.5% to 1% range last week, as I was saying, right? 70s to the 72s off of the dip. ON Semiconductors. Here's where I was calling the dip, right? We wanted the 72 area, lower end of this range, as close as you can get, all the way down to our 70s, which would have been the 200 MA. If you can see, if you go back, check those videos, that was the range where we were getting 0.5% trades. And as you can see, guys, today, worthless, right? Worthless. So good job if you took those positions here. I know not a lot of guys watch the channel yet, but for myself and a few friends that I help out with this stuff, they are now worthless. We were able to close out a few contracts of those on the day. And yeah, great day so far. So last one, Tesla. Tesla, you could have got the, so Tesla, if you remember, guys, last week, the 167.5s were paying about 0.5%. It was getting closer to 0.8, 0.1%. I was saying that with the last week there, around the high 170s was a bit too close for my liking. I was looking at this, 167.5 to 172.5, right? So the 172.5, as you can see, they're still paying 0.5%. But if you were able to clip this morning on the downside here, as you can see, guys, we lost about 25 cents on the day. That would have put us right near about 65 cents, a bit more. And considering Friday's premium drop-off as well, this play is underway. Tesla kind of closed slightly under what it was on Thursday. So you did get some theta decay here, but any further movement to the upside and the premium should come out of these quite fast. So we do still have, I believe, 2 out of 3 contracts for Tesla still on the table. Off for Friday, and like I said, guys, if I get a sign, no problem. I'm happy owning the stock at those levels. So what I wanted to do before leaving you guys is I wanted to show you a few plays that I've been looking at, right? So, Schwab was one of them that I took last week. Didn't make a video on it, but as you can see here, I got a 40 call here, July 23rd. I took it there, kind of went down on it initially, but I really like this level. If we go out here, if you go out, this is really our previous support area, right? Previous support zone, rather. And I like Schwab. Schwab is one of the best. They're one of the most well-capitalized banks out of all of them. Look at these margins. Look at these profit margins. That's from their brokerage industry. Charles Schwab, and they also control TD Ameritrade. They have a controlling interest in TD Ameritrade. 2 largest brokers in the entire U.S., right? They just make money hand over fist. So they're not entirely dependent on loans, home mortgages, and stuff like that, right? So they're more oriented towards the brokerage industry, which gives them the higher margins. And that's why I like this play out of all the top tier banks. And if you could see, I still have it on my screen here. So we had the, as of last Thursday, right? We wrote the at the money 49s because I actually wanted the shares. So I wrote the at the money 49s. They gave me about, well, I didn't clip it at the lower end of the day here. I think I wrote them on Thursday, as a matter of fact. And, we were about slightly above 50 here. So I wrote the 49s, which was relatively close, kind of at the money almost. And it gave me 81 cents, which I thought was really good. That's about 1.5% for a week, almost close to 2%, right? Close to 2% for 1 week from Thursday, right? And, coming from I think it was Tuesday or Wednesday, right? So it was about 1 week out, considering that Friday was wasn't really a day. I wrote them about Tuesday or Wednesday. It was one of these 2 days, but I remember I wrote them slightly under 50. And yeah, it was about a almost 2% trade. I was willing to take that. I was willing to even take the shares at 49 with an 81 cent credit. That would have put me at about 48.11. And we were kind of getting really extended away from our short-term moving averages here. So I'm expecting a bit of mean reversion, at least back to these moving averages, if nothing else, right? So that's the trade that I'm looking for. I think that this company got, beat down kind of unfairly. And even if you are looking for some further consolidation of the downside, I think that there has to be a bit of mean reversion here, even if you are looking for this trade, right? But if we would do that, create a lot of space, I like Schwab from that level. Personal opinion, not financial advice. You will lose money. But you do have my levels here on the chart, which I'm playing off of. I love these mean reversion trades, especially when they're longer time frame trades, right? Which is bringing us into our next play here that I want to kind of bring up to you guys, Estee Lauder, right? Last week I was talking about Costco, the Costco tightening range, right? Let me bring you another long-term, long-term pattern that I'm seeing play out here, right? Estee Lauder. Very, very solid company, right? They kind of got criticized a little bit because of a lot of their business is highly dependent on China, and China was shut down last year. But as you can see, guys, very, very decent margins, revenue growth after the last 5 years. PE is slightly elevated, guys. But if you look at a lot of the names in the beauty sector, this sector does tend to run a little bit rich. This is the main beauty company that runs because they've marketed a lot to millennials and whatnot. I forget what the Interparfums, right? Interparfums is one of the other ones that's run kind of a little bit hot. But if you look at these charts, guys, they do tend to run a little bit hot. As you can see, price to earnings, this one's 36. So above the S&P right now, which is about 25. If we were coming back to Estee Lauder, right, they're a bit rich. They need to grow into their valuation a bit more, but they've always traded slightly rich. If you look at this chart on the weekly, guys, I mean, this company just prints money. It really does print money, right? If you look at Elf, I mean, Elf's been allowed to run up considerably. I mean, talking from the lows of last May, right? You're up, almost a 4x at this point, right? This is now at a 95 PE. Still gets great buy recommendations from, everybody. Look, for some reason, this is still a buy, right? Still a buy. Personally, like, look at the monthly RSI, right? I personally wouldn't buy this up here. Not the type of trade that I'll take. But as we were talking about intra-sector rotation earlier, when some names within a certain sector pull back, it allows for other names to grow. So I'm loving Estee Lauder here at these levels. I'm targeting what I'm trying to do, guys. And this is the last play that I'm going to leave you guys off because this video is getting a bit long now. We're going to touch back upon it. The play that I want to do here, play that I'm looking for here personally, is I'm looking for June, since we are looking for short-term upside on this for a little swing trade here, right? Since I'm looking for this, I'm looking for the June 16th, right? Potentially some June 16th in the money around 220. If you look at this call, right, it's about, let's call it about $27, right? So 27 plus 220 will be about 247. So we'd be paying about $7 above current price. So our break even will be 247. Don't really like when there's that much premium on it, but what you can do here, what I was looking to do, is you sell the 270 call against it. Let's call it about $3. So that you would get a $3 credit and you'd be paying 27 and getting $3 back. And still, if it moves, you'll be capturing most of this move, guys. The percentage gains to the upside will still be really good. But you'll only be paying 24, right? 27 minus 24, which is only about $3.50 over share price, which is about, 1% is $2, 2.4. So that's maybe 1.5%. That's what I love when I'm doing call options to the upside for plays. When I'm only playing about when I'm paying 1 to 2% in extrinsic value, meaning in options premium versus the shares. And look, for this same play, right, to get 100 share exposure, it would cost me $24,000. But I'm getting that same exposure for 27 minus 3 for $24 times 100, $2,400. So I'm getting the same amount of share exposure for 1/10 of the price. And my goal is to take this, like I'm saying, guys, I just want to take this, right? I only want to take this to the high of the head and shoulders. I'm not asking for going to the moon here. I only want to take it to the top of the head and shoulders, in the 260, 270 area. I may be looking because I'll do a couple contracts, but I'll be, taking some off. And that's it. That's my long-term play swing trade that I'm kind of looking at here, guys. Hope you guys enjoyed the video. Sorry for making it a bit long. Really do apologize. I'll try to make them shorter, but, I give the plays. There's a lot of channels that they just do the daily market recaps and they don't give plays at the same time. So I like to do the daily market recaps and give the plays at the same time. I will be making videos where I do like top 5 plays I'm looking at now, top 3 plays I'm looking at this week, yes. But for now, we're going to include them in the daily market recaps and we're going to work on a structure a bit more. So if you enjoyed the video, if you learned something, got some good ideas, enjoyed my opinions, consider liking the video, consider subscribing. I love you guys, and we'll see you guys tomorrow.